Now, as much as I'd like to say yes to that, there are certain technical conditions, particularly driving now in the Philippine standpoint, that I'd like to show you that perhaps may argue in less favor of that particular sentiment. Looking in the Philippines and applying that definition of a bear market condition, the Philippine Stock Exchange Index, again, this was as of the 21st of January. And if you've noticed that your index and your all-share index has already fallen to 22%. The sub-indices in the market, if you look at it over here, have fallen between 21 to even 47% for the mining and oil sector. But the mining and oil sector has been falling for quite a while right now, so maybe that's not too good gearing to do it. And the only one holding above really is the holdings sub-index. So these are your conglomerates or your holding companies that have been at least underperforming the decline that we've seen into the condition. Now, so the only thing that we've not seen is we have not seen the 2-month condition in these four, but we've seen it in the services and mining and oil sectors. So these are the two sectors that you really might want to take an extreme look at in terms of being very defensive for now, because there's a reason why prices are down in that particular category. So if we're going to be looking for particular issues to be able to move into, I would rather stay out of these two for the meantime and maybe concentrate on the first four as an industry lineup. Okay? Second thing I want to point out in this particular graph is that if you notice the weekly RSIs, let me explain that a little bit. An RSI is a technical indicator that tells you whether the market sell-off has already been sold down too much. Now, if it is sold down too much, then the capacity for that market to rebound becomes very high. And that number is keyed on somewhere at 30% or lower. So if you see a rating here that's below 30%, that means that market has been extremely sold down, and its ability to make a rebound relatively soon after that triggering that particular event comes to be. And that might be also an opportunity that you also might want to have a close look at. All right. Now, the Philippine index. I guess I've turned a little bit more on the dark side, if you'd like to call it. And that means when we say the dark side, more on the bearish side, only when the index fell below 6,600. If you notice last year, this was the number we were toying around with, and we said this is a crucial spot, and this particular spot had to be defended, and if prices had broken below that, then things had to be readjusted. Estimates had to be checked. New trends would be surfacing out of that, and it's because of that that we've had to be able to make certain types of technical adjustments as well. Because of the breakdown in this area right here, we've seen the trend of the market re-angle back down in the short term and the medium term. And because of those particular re-anglings of trends, that would mean that we would have to be a little bit more defensive in our structures. We have to wait for prices to come into a situation where it's been exhaustedly sold down before getting back into it. Now, of course, you are going to probably have to wear 2 or 3 hats here. Are you first a trader or are you a long-term investor? If you are a person using cost averaging, you tend to be a long-term investor. If you're trying to scalp prices, you're a short-term investor. And if you're taking one of the two things, the interpretation of much of the signals here might be a little bit different of what you're looking at. Now, in general, technical traders stay away from declines or downtrends. The only time that they even get their feet wet or even try to get their feet wet is in a condition where the market exhausts itself and there's an opportunity to make a big amount of money in a short period of time without trying to discount the fact that, yes, it's still going down, but maybe you can make an interim recovery. And I feel right now in this market, you've seen our index fall down here. My immediate estimate for support is closer to about 5,890. We've come pretty close to that just the other day when your index was closer to 6,000. So that's not really too far away. Ultimately, the major support of the market will be at 5,700. Now, I'll show you how to navigate through this particular market in a little while, but I just want to be able to finish the other circumstances that plague, of course, what's been going on in the Philippines. Now, the other issue we've been dealing with is, of course, the devaluation of the peso. Again, this is not only happening in the Philippines, it has happened in different markets in Asia, and that would be from Malaysia to Singapore to Indonesia to India. It's happened in quite a bit. Of course, China has the one that led the most. But one thing I wanted to point out is, as you can see, the channel of which a devaluation is taking place. The other day, we've been on the upper end of that range, perhaps not in the ultimate high of it, and I think that would be closer to 48.20. But right now, closer to 48, I'm already seeing some sort of stopping power as there are positions already trying to be able to withstand that pressure of devaluation. In fact, I've already seen evidence in Malaysia, in Indonesia, in Singapore, in Thailand, that their currencies are starting to revalue, to pull back a little bit. So I think the immediate fire has been put out. There might be some adjustments down, but please understand that the medium-term trend is still on a devaluing streak. And I think people will still be quite aware of that. But for the moment, perhaps the devaluations might peter out for the meantime. So my support range for that will probably be closer to 47, maybe even 46.80 as the lower end of that particular channel. High side's about 48.20. Okay, so let's discuss the conditions about what may play out into a bearish-like phenomena. Now, one of the cycles that technical analysts use is a little guide map called the Elliott wave cycle. And the Elliott wave cycle I have drawn up here. Now, it tells you that in a clear bull markets will climb up in 5 phases. 1, 2, 3, 4, 5. Blow itself out and go into what we call a corrective phase, or some people would like to call that a bear phase. And in a bearish phase, you will have 3 waves: an A wave, a B wave, and a C wave. Take note, an A wave is a decline, a C wave is a decline, but a B wave is a rally. And such rallies could take weeks or months to be able to generate. Okay? Now, I'm going to be able to display the Philippine index under this map, just so you can see where we are today. So, given this and the corrective phase, please take note of an uptrend line, just like what you see over here. The uptrend line has been broken, confirmed by a break of 6,600, and now we've seen the index cast back down. Now, what you're seeing into the index is coming close to the end of what we call the A wave. And when we say the end, that means this initial sell-off is coming to a conclusion. And I don't know if that's happened already right now because we've had the market recovery, possible. But there is a little bit of space more in terms of support, so it's possible it can happen. But clearly we have to be ready for it because a potential B wave can generate quite a bit of a rally, especially after your market has been quite depressed or oversold. Now, how do I know that we are on this side of the equation and not still on the upper band over there? Like some people say, could I be still somewhere over here? Why am I over here? Well, for one, my uptrend line has been broken. This uptrend line began in 2009 and has already ended. Right? So either that market's either going down or going sideways for the meantime. Second, you will know because the difference is you will see 5 waves going down. Normally, a reaction in a typical bull market will only be 3. If it extends to 5 or more, that's more of a bearish-like phenomenon. These are some of the signals that technical analysts use to be able to confirm the change in the particular trend. So I blew up what happened here on the right side, so you can see it a little bit clearer. And if you'd like to count the waves along with me, you will also find that there are 1, 2, 3, 4, 5 waves into the decline. And again, after that 5th wave, usually it blows itself out. Then, of course, a counter rally takes place. But that is evidence that we're likely tipping off from a very bullish market and either going sideways or perhaps down. And, of course, the definitions are the only things left that's keeping us from actually determining we are officially in a bear market. Okay, so in my personal view, definition or not, it seems, in my perspective, that we are towards the 5th wave of a bearish A wave. And given the context of that, what we're going to be expecting next is a B wave rally. I will draw what that B will probably look like so you can prepare yourself a little bit more. But please don't lose sight that after a major rally takes place, there will be another decline. And that decline usually gets people much more depressed than what would have seen in an A wave. So I want you to be able to hang in preparation, right? Because once you see what is to happen, you can be a bit more forearmed to be able to take care of such conditions. Okay, so this is what a B wave would normally look like. So after your market has fallen down so much, just like the Philippine index falling down so much, this is what I would expect a counter rally would look like. Now, please remember, a counter rally doesn't take place in days. It will take several moments to do it, and you will have some ups and downs along with that price movement as well. So it will be choppy. Remember, we're coming from a decline. A lot of people don't believe that a rally might come as of now. In fact, when you've seen that the forcefulness of declines like this are very heavy, that means a lot more people saying, oh, that's it. This is not going to climb anymore. And that's the reason why they're liquidating prices. Okay, but that's that extreme that we're going to have to learn how to take advantage of. So what happens here is what we call a B wave. Just like you see here, an A wave on a A, B, C rally. And we might have an A, B, C rally as well. I drew that in dotted lines because it's what I dream of when I go to sleep at night. And with regards to the B wave of what you're looking at, certain characteristics is what we want to have a look at. So we know we're not just pushing that button a little bit too early. Remember, for prices to be able to turn, it takes a little bit of time for that turn to happen. And that's why normally it creates what is known as an area pattern or reversal pattern. Those reversal patterns typically look something like this. Here on the right side of my graph, it will look like a letter W or a slightly higher angled, higher low base coming out here before the rally gets a little bit more steam and pushes more with a little bit more effect. Okay? Only in very, very strongly pushed down prices will you get what is known as a V-shaped rally. This is also a possibility. Doesn't happen all the time, but most of the time, these are what rallies normally look like. Okay? So once you get to see that a double confirmation of support takes place and you get another recovery, some of you, particularly the traders in the short term, might want to take a little advantage of this. We'll talk about how to do that in the strategy later on, but these are the signals that we want to have a look at before just casting ourselves off in any decline. Okay? Like April said, this is not the time to just catch a falling knife, right? There has to be some justification why you're doing it, and it sure can't be your emotion. As a potential rally, I think the first part of a rally could even bring the market back to about 6,600 or 6,700. Right now, we're doing about 6,002 or so. And so that means that there's a possibility in the short term that there could be a counter move. But please make sure you understand there might be some choppiness before the full weight of that rally surfaces. Now, if the rally is very strong, then it could even extend, maybe even to up to 7 or 7.4. But I am not that optimistic as of yet. Let me see what the market does as a base, and I'll be able to guide you along in time as I see the level of strength that the market intunes. Okay. So what do we do and how do we make money off this? So let's just make sure our assumptions are correct. First, we are clearly in a downtrend. Okay, that's not changed. But we are nearing the end of the first part of that decline, the A wave. And because we're coming towards the conclusion of that, I've seen evidence in RSIs being very oversold. I've seen prices showing spreads to their moving averages. Many technical gibberish words telling you that enough is enough. Right? So we're near that area. We're not saying it's there completely, but we're near that zone. So if you're looking to be able to sell a majority of your position today, I don't think that might be wise. You want to wait for the rally to be able to come in, to be able to do your lightening. So maybe you want to hang tight for the meantime. But again, let's just make sure that we watch the markets very carefully and address our support stops just in case we can handle any uncertain risks. Okay? Now, since such support areas will come around, we will now try to be able to move into this particular rally. And a B wave rally that will come, how do we come around to participate in this particular types of rally conditions? So in getting a little bit more technical now, we have to be able to look for conditions in the market that have shown that it's been really radically sold off. Remember, if I were to drop a tennis ball from my hand, if I hold it high behind the ground, there will be the ability for it to bounce because I'm dropping it from a very high point. But if I get a tennis ball and I hold it down here and I drop it, the counter bounce will be very small too, right? So you want to be able to look for good quality names, and those are the ones that you will try to pick off for a potential rally. This is not the type of market environment where you want to dig deep into low quality names. Low quality names of stocks, meaning stocks are not as best as the blue chips, and you want to be able to make sure that liquidity is with you, that you can move in and out of your stock like this if you need to, right? Because markets will be choppy and you would need to be nimble in this particular type of orientation. So look for a selling extreme, and remember the plan of action here. We're not here to buy that low price and hold it for a while because there's a possibility there could be one more decline coming eventually. So what we want to do is take advantage of this heavy and extreme situation of selling, take a little bit of a position, wait for the recovery, and take some profits so that we can do something in the midstream of all this choppiness and heaviness that we're seeing in world economic conditions. All right? So our objective is to sell into the next level of resistance, and my targets would be somewhere between the 16-day moving average and your 32-day moving average. I've plotted those numbers up in one of my final slides for you so you don't have to do any work. All right. And please prepare to be able to look for those patterns. So double bottoms, V-shapes, these are what you want to look at to tell you that the rally is beginning so that you can come around to be able to build maybe just a small position in here to try to make whatever money that you can during these very tough times. And again, I cannot stress enough the quality of the issue that you want to pick. Okay, this is not the time to be able to look at peripheral issues. This is your opportunity to buy big names at beautiful prices, right? Because you only get that in crisis moments. And so in a crisis moment, I don't think what you should be doing is looking at all the other very volatile stocks that perhaps most of the bloggers are currently writing about right now, right? Because maybe they're just trying to promote their own holdings so that they can sell at a better price. Okay? Go with the quality, go where the volumes are good. Okay, in tough times, it pays to be in quality issues because these are the ones that should recover well and should recover first. Okay, so a typical example of what I would do when I would look at price chart. For example, this is a graph of Universal Robina Corporation on the right side. And again, I want to be able to look for names that are good, just like this, and look for an opportunity where the market has sold itself down quite tremendously. So a couple of weeks ago, you can see Universal Robina Corporation here on the right side of the graph. I mean, it plummeted very, very heavily, coming close to lows that it had in the past. And because of those conditions, it generated RSI values below 30% at 23 in this particular case. And even in this last one, just 2 days ago, about 29%. Okay, and these conditions have managed to be able to allow the stock to be able to rally in the last few days. And what you do is you try to be able to see where the short-term moving averages will be. And those levels are somewhere over here, 182 to about 182.60. And just the other day, I think it was Thursday or Friday, this actually rallied right away, and it actually hit these levels already quite immediately. So there is the ability for you to make some money during these particular types of rebounds, but only if prices have been grossly oversold. And so what we'll do right now is be able to focus on such instances. I've written down some conditions for you to have a look at. So please take a look at that at your own leisure, and so how you can measure it off and apply it into some of the graphs that you are also looking at. Here are two more examples of what I mean by an oversold market. One is JG Summit Holdings, and the other one is Ayala Land. I wanted to include Ayala Corporation there too, but I just want to use two examples for you. Again, look at the conditions. Good names, heavy downstreak in price, and you want to make sure it's oversold as told to you by your RSI. The distance from price to where your short-term moving averages are a little bit far. So if it were to rally there, you would have good upside potential into the short term. And those are opportunities that you can make on a very overstretched downward moving market like this. Okay? Ayala Land, exactly the same. Very, very sharp decline. It's fallen below 28 pesos per share. If you look at the potential upside for this one, back to 29.35 or 30.90. So we do have a little bit of an upside in terms of a potential rebound as well in that particular stock. Okay, but I know I might be looking for the opportunity here, but I want to make sure, like I told you earlier, please make sure it is clear. We are still in a reactive trend, and being in a reactive trend means that what you're doing right now is a short-term maneuver. You're going to be buying an oversold market and liquidating it when it comes closer to resistance. Here's an example of Ayala Corporation back in history, and I've looked out and faced with this. I think this was back in 2005, where a downtrend was also similarly cast. And just to show you, there were heavily oversold moments in Ayala Corporation. Another one over here. And these are the counter rallies that you're going to try to make a little money in. Okay, here's an example of a V-shaped type rally, a very, very fast-paced rally. And this is the type where we see double bottoms take place first before you see the rally back. Now, once rallies go back into your moving averages or your downtrend lines, That's your stopping point. I mean, that's where you're supposed to be taking your profit, and you're supposed to be able to lighten back into your position and waiting for that next oversold condition to be reinstalled again. So this is what we do inside a bearish market. Although traders are very, very anemic and going in very heavily in these types of markets, you can do it, but make sure your volumes are very controlled, that you do not over-expect for what markets are to do, but you're there to be able to scalp on these oversold conditions where emotions are very high in the selling capacity. Remember, it takes time to drive a price down. If you drive it too far down very quickly, the rebound effect can be quite useful for many traders as well. Now, this is a very long list. This is a list of the Philippine Stock Exchange Index members. So there are 30 companies on this list. And what I've tried to do is to be able to list down all the data that I've managed to be able to look at. Stock price, the market price, what is your RSI in a daily and a weekly. If you see that the color is red, that means the stock is oversold in the daily, or if it's red in the weekly, it's also oversold in the weekly. If it's oversold in both, that's a situation you can take advantage of, because that means the stock price has been overly addressed, and the counter rally from there can be quite substantial. Okay? Now, I filtered some of these particular choices with quality names. I'm not saying that any of those issues are bad there, but I've put in some of my personal assessment of each one. I tried to stay away from an industry that's been so amply overshot downwards, because there might be a reason why that particular sector is very, very sharply down. Particularly, for example, mining, gaming, those things have been quite depressed recently, so I just want to be a little bit more careful about that. If you want to trade issues in that avenue and you are getting oversold conditions, you might get a rally. Just make sure that you know how to handle them and don't put too much money in there. So the names that I've highlighted in green here on the left side are what I would focus on. So my list would say Ayala Corporation, Ayala Land, DMC, Emperador, First Gen, ICTS, JG Summit, Megworld, and SM. Now, if you look on the middle to the right side of my graph, I graphed an 8-day moving average, a 16-day moving average, and my 32-day moving average. I put the values down here. These are the values of those moving averages, and beside that is the percent difference. So that means that if you were to have bought at this price, and the rally goes to either this price, or this price, this is the potential of what you can make in a potential counter rally of the market. Now, my offer would be, if you see upsides, at least in the short term, of about over maybe 5%, or maybe even over 10% with regards to the 16 and 32 day, those might be potential trade actions that you want to be able to look at into the short term. Now, there are a few other names that I have in mind, although I didn't include it in my list because they are not oversold. Right? But some of the issues that I have just off my mind that have actually been making stronger technical formations are the following companies. I'll just let you know this because you're here. I'll give you a bonus, since the people who did not come today, then do your own work. So the conditions of some of the stronger issues that I've had are the following. We have MPI, Manila Water, LTG. I'm already seeing some recovery action in the three banks, BPI, BDO, and Metrobank. And I'm also taking a look because I'm seeing divergences. Well, I've shown you one, Universal Rubina Corporation. I'm also seeing a little small divergence in DNL, so I could think there could be potential rally action there. And perhaps maybe even Zerpass. But I would put that the last on my list because I didn't really come down as much as the way DNL did, providing the particular value inside. Now, I've also noticed in the last few days some rally into the gaming sector, particularly Bloomberry, PLC, and LR. Now, I know it might be tempting. You might be saying, my God, it came from the sky and it's gone way back down below the earth, and the potential for it to rally is monumental. But again, please, I ask you again, why did it fall down so much? Right? In fact, ask that question to all the stocks you're looking at, and you see if there's valid reason as to if there is or if there is none. If there is, then perhaps you might want to be able to look for those that are showing stronger potential rather than this very speculative potential. Right? The conditions of what would make a bearish market can be very testy, and the last thing you want is to be able to buy an issue that you cannot sell well when things go wrong. right? So make sure that you don't sacrifice the conditions of what you have there. But also, by the way, I've also seen some recovery action in the two telco stocks, which is Globe and PLDT. So you might want to also include that into your watch list. But like I said, the telco sector is not exactly too very exciting right now, but it's not as badly beaten as what the gaming sector was. Okay, so in summary, global markets have really shifted, and they're shifting what we call to the right side, from the left side being a bullish one to the right side becoming a bit more of a bearish one. We don't have that ink count as an actual definition of 2 months, but just in case it does happen, it pays to be prepared. All right, and please make sure that choppiness will accompany rallies as well, and we're here to be able to take advantage of what we can. The Philippines has suffered a bearish decline because it has gone below the 20% zone. And because of that, a recent pullback to 6,000 did make prices a little bit more attractive than where it was even as far as 1 month and a half ago or 2 months ago, which was very, very different in terms of condition. And ultimately, I'm looking at a potential support target of 5,890 to 5,700 as my targets for this year on the support side. That could happen maybe after a B-wave rally. It doesn't have to happen right now. Okay? And of course, we are now ending the verge of an A wave. So I think for those people who are traders, you might get your momentary opportunity to try to make a little bit of money over here before things start to get a little bit more depressed. And of course, I would think that this would trigger your B wave. Take advantage of the extreme and, of course, the heavy emotional selling that you've been seeing in some of the issues. These are the ingredients that can make a bounce a bit more worthy. Okay? And like I said, declines have to fall at a controlled pace. When you see a massive decline like that, please don't just sell like that based on your emotion. Wait for prices to recover first before you attempt to be able to do your lightening. Okay, and I'm pretty sure that you will see a wider rally once the A wave completes itself. I don't mean it's going to happen tomorrow. I hope it does. But I think you will probably see more choppiness first before you would see a great more of elevation. Hopefully, the target between 6.6 to 6.7. And again, as much as whatever short-term opportunity that you can come up, please understand that we are in an environment where we are dealing with excess. Right? China's dealing with an excess problem. We have US, we're pulling back because of excessive prices. The Philippines, we have our own different things to be able to handle. We have excess cars causing traffic. We have excess amounts of planes trying to land in airports that can't accommodate them anymore. We have excess in quite a number of things that's causing quite a bit of trouble, and we need things to change, and we need things to adapt to those particular circumstances. And we are now in between, and so we're going to go through a period of transition in the world and in the Philippines. And given that context, and based on what we talked about last time in our last market outlook, where we talked about shifting gears, I don't know if you had picked up on the potential for that shifting gears to be even a much lower gear. Because in fact, that's probably what we're going to be seeing into the next 6 months to 8 months from now. Okay, so that kind of ends my presentation. I hope that you've managed to be able to have a look at the prospects of what the market is, but also to understand the potential risks. We will go through phases like this once in a while. Now, bear through it. We'll be able to come inside and find the opportunities when you have it. We've seen bear markets come and go. And believe me, in the end, markets will always climb back. All right, with that, thank you very much, everybody.